Most traders do not lose money because they picked the wrong direction in a trade. They lost money because their stop loss was placed wrong. A bad stop loss placement will destroy a good trade. And a proper stop loss can protect you even if you were to be wrong. In this video, I'm going to show you how to place your stop loss the right way based off structure, logic, price action, and not emotions or hope. And these instructions are framed within my book, The Ultimate Stop Loss. Everything that you need to know about placing a stop loss. Let's get to it. This video is for the traders at every level. It's for the beginners who don't know where the stop loss should go. It's for the experienced traders who keep getting stopped out way too early. If you ever ask yourself, why did price hit my stop and then go my way after? This is for you. Stop loss is not about fear. It's not about emotions and hope. It is about defining where your trade idea is wrong. Once you understand that, everything changes. Okay? So again, it is about defining where your trade idea went wrong. Once you understand that, everything changes. Okay? A stop loss is not a random number of pips. Okay? A stop loss is not something you place just to feel safe. A stop loss define invalidation. Okay? Look. Let's look at this chart real quick where we have a bullish trend. All right. We have all of our previous zones pre-marked already. Let's throw some identity to it. Okay. Let's just identify the high points. Right. So we got higher highs. Okay. Running through really quick. Higher highs. And of course, we have our high lows. Our high low points, of course, is the areas where we look to enter our trade. Okay. All right, it's a high low where each high is getting higher than the previous one. Okay. So, of course, for an uptrend, bullish market, we only buy at high low point because we buy it at the bottom for the market to go right back up. Right. So well, as you can see, market bought up right to this point and then it come back to a previous zone that was marked. You're looking for this area to take your trade. Once market gives you your price action, right? PA, price action. You want to target the last low. In the case of this one, that was the previous higher low for your stop loss, right? After you enter, this is where you place in your SL. That's where you place in your stop loss. Now, if market were to hypothetically come back to this point, this area is no longer valid for you to place your stop loss. Okay. You would have to look at the next structural low point after entering, once market gives you your valid price action, the engulfing price action, depending on which one you get out of the 5. Okay. Once you enter, you will target the last low to place your stop loss. All right. It's not emotion. It's not hope. You simply going based of what you understand, market structure, You're simply reading and reacting to what the market gives you. Okay. Straight to the point. Yeah. So like I was saying, straight to the point. This is why most traders struggle with the stop losses. They place it based on fear, not structure. That's something we do not want to do. Okay. Entry point, previous low for your stop loss, simply based off structure. All right. We don't place it based off fear or hope. We just simply reacting to what the market give us. Okay. So again, now this right here is really a great example of how the market can affect some of us emotionally. But when you simply are reacting based on what the market gives you, right? You're following your rules, you're being disciplined. It invalidates that feeling itself, that fear, that doubt you may have after you had all your confirmation. This is what I'm talking about right here, right? So we know market is in a bullish trend where it's giving us higher high and a higher low. Now, at this point, market did break structure, right? And then it came back to bounce off our previous zone, okay? Now, let's just say we did get our price action here. We got a PA, or price action at this point. We take our price action for what it is. The engulfing price action, we got a bullish engulfing here. We enter our trade here. We want to generate a stop loss at the next zone, right? And there's absolutely nothing wrong with that. Once you place your stop loss at the next low, this is your stop loss. If you pay attention, notice how market continue to drop to the low side, right? And then just to shoot up. This is what I mean when I say it will protect you even when you feel like you are wrong. Meaning you take your trade for what it is with the correct price action, right? But it start going against you. It's okay. As long you did what you were supposed to do, just let the market do what the market does. Okay. Your job is just to simply read and react, right? A lot of traders lose money that way because they close early and then they would re-enter for a sell because they think trend changed because market broke below a little structure here. They forgot the bigger picture, why they were in this trade to begin with. Okay. So that happened often. So simply read and react, take your initial trade for what it is and place your stop loss at the low. Okay. We may have a high percentage winning rate, but it's not 100% winning every single time. But when you do follow the rules that you wrote down by simply reading and reacting to what the market gives you, your chances of winning is a lot higher. Okay. The fear, the doubts, gone because you know you taking the market for simply what it is. Okay. Let's look at another example real quick, right? Okay. So, here's another example also where we're going to go over our first break as far as a reversal trend, right? Just like before, we have market giving us higher highs, right? So small little lesson on structure itself. For a bullish market, you naturally will have higher highs where each high is higher than the previous high. And of course you get high lows, right? Where each high point is higher than the previous, each high point is higher than the previous low point. So that's why it's called a higher low, right? So just to slow it down a little bit, okay? Bullish market or an uptrend market will give you higher highs and higher lows, okay? As you continue. Now, we know market is trending up. Also, at every break and retest, it's not always going to be at the zone, of course. Sometimes it falls 50% between the top and the bottom point, right, from where it originated from. Now, once again, you enter your trade at structure point, you target the last low to place your stop loss. So we have some rules for that, right? So rule number one, stop loss must always be placed where structure break. What do I mean by that, right? So market breaks point, right? So like right here, okay? Market breaks point to retest, right? And then it shoot up. When it breaks this structure point and come back to retest it, you want to look at the last point area where market had broke or to come back to retest, right? So this area here, once you enter at this low point, you put your stop loss at the last previous low. Very simple, right? Or you could always say stop loss goes at the last previous low. Now, rule number two, if you're not comfortable with the stop loss, don't take the trade. Okay. Just don't take it if you're not comfortable with the stop loss. Of course, I would highly recommend that you write it down why you're not comfortable with it, but don't take the trade. All right. Definitely don't stay away from it. Just reset, reevaluate. And rule number three, a good stop loss create calm, not anxiety. Okay. Now, with that being said, market did continue and then broke previous structure high to give you a new high point at the next high point, the next higher high. Now, this right here, market went down to retest, right? To buy. So vice versa. You look to enter your trade and you look at the next structure low to put your stop loss. Now, as market buy up, it started slowing down, to be exact, right? It started giving you a wedge. Me personally, once I see this, I call this a slice of pie, like a pizza, slice of pie, right? It's normally time to eat. Market is bouncing off the zone, but every time it bounces off the zone, the pullback is getting smaller and smaller and smaller. When you get something like this, it's not that we're trying to buy it or we're trying to sell it. We're simply waiting for the break of structure and then the retest to take the next trade. What I mean by that is we know we're in a bullish trend. I am not saying market is going to sell. I am not saying market is going to buy, but we do understand market is at a bullish trend. So in the case of this, since we do looking for the reversal, we would wait for market to break the previous structure point. That is the previous structure point. Okay. So we will be looking for something like this. Okay. Once market breaks this point, okay. Once it breaks, we wait for the pullback like so. Okay. Once market give us that pullback, okay, that's why I was talking about the first break, right? That's the first break right here. At this point here, we wait for a bearish engulfing to enter for sell. Once we enter this trade, we target again the previous high for a stop loss. Now, since I did draw this straight down, I didn't create any infrastructure in between. This right here will be your previous high. So you enter for your sell and you targeting this high as your stop loss. And then of course, TP will be targeting at the next structure point below. Okay. We keeping it very plain and simple, straight to the point. We're not overreacting. We are not over complicating anything. Okay. Simply just read and react. Don't make it something that it's not. Don't. We have the tendency to do that, but let's not do that. Okay. Just keep it for what it is. Very plain and simple. All right. On to the next one. Since we got a trend reversal from here, right? We got the break. We take our trade to come down like so. Now we're going to look at a setup as far as when market is now in a downtrend, right? And when we take our sell, how it would look like to continue back down. Okay, so we have a downtrend market. Okay, downtrend market also is considered as a selling market, right? So when you have a downtrend market, structure will normally give you lower lows where each low is lower than the previous low. Okay, and then of course you will have lower high where each high is getting lower than the previous high point. All right. Just to sum it up real quick. So our downtrend give you lower lows and lower highs. Also, when you are looking to sell a bearish market or a falling market or a market that's going down, I'm saying the same thing, just in different ways. You look for the pullback at the previous low point, right? So if this right here is a previous low point, once market breaks structure and comes back to the previous zone, which is the previous lower low point, you will look for your PA, aka your price action. Once market gives you your bearish price action, any one of the five, of course, you enter your trade, and then again you target the previous high. Now, since we are selling, we're targeting the previous high for the stop loss. I'm sorry. Up top here will be your stop loss. Okay. Now, most traders move their stop losses because they are emotional. We all went through it, and some of us, or a lot of us, are currently going through it. We simply move it because we are emotional in regarding to how we feel about our trade and our stop loss. So again, most traders move their stop loss because they are emotional. All right. Now, a disciplined trader accepted the risk itself before they enter the trade. Okay. So we could even look at the next one, right? So market broke structure, previous lower low. So we look for market to come back to retest that zone point, right? Break, retest. Once market come back to that retest point, we already understand we have to put a stop loss at the previous high. So we calculate the PIBs or the lot size, risk reward ratio, how much we're risking, right? So we already accept the risk before we enter the trade. Okay. So with that being said, a stop loss is not about avoiding losses. It's about protecting your account for the long term. Okay. So when you enter here, you place your stop loss at the previous high. Rinse and repeat. Rinse and repeat. As market continue. Now, once you enter the trade and this goes your way, you're looking for market to either one, bounce here, and then break through. Of course, you always want your trade to go a bit longer, right? Once it break through structure, right? Same concept. Once it comes back to the previous structure point, this is where you are looking to take your trade. Now, there are times we get something like this. We do get a retest point, right? And market range. What I mean by that is it bounce off that retest zone multiple times. Let's just say with the first time around, it did give us a bearish engulfing. We take our trade, right? We want to make sure we place our stop loss at the previous high. It's okay. As market continue to range, you have nothing to worry about because you took the trade for what it is. You're not changing your bias into a buy because you took the sell based on the overall trend, based on the higher time frame, and that was the setup the market give us. So we make sure we respect the market for what it is. We going to respect our rules and our plan, right? So we take our trade, leave it alone. So it doesn't matter if it sits there for 2, 3, 4 hours or 8 hours, sometimes even a day or two, but eventually market will have to react accordingly. And like you see here, market fell to the bottom side. All right. So fear, doubts, all that happen here when market is literally ranging or consolidating within the point. Okay. So even at times, if it were to give you a bullish engulfing after the bearish engulfing, you're not changing your bias because it's at a break and retest point for a sell. Okay. Now, these are right here. This is an example of a double top setup. Okay. So we went over downtrend, break and retest, uptrend, break and retest. These are DT where double top, where market go to a previous high. Okay. Here and sell and sold. Okay. When market goes back to that same zone, you look to the left to see what it did last time. Okay. We are looking to the left to see what it did last time, simply waiting for it to do exactly the same thing. Now, this is a double top. We don't have a previous structure to the left as far as a previous high, but we do have the wick high right here. We have the wick high. So when market does give us a bearish engulfing, right, to enter for the sell, we want to use the wick high from the structure to the left side to take our sell. Okay. Keep it plain and simple. All right. Now, this right here would be an example for a double bottom within the same concept, right? We have a double bottom, and ironically, we don't have a previous low point where we would place a stop loss. Structural wise, right? But once market does give us a bullish engulfing, we enter a trade and we're looking at the previous wick low. We're looking to the left. Okay. We look to the left. We always look to the left to see what the market did last time. And we're looking for it to do exactly the same thing to enter to go to the top side. Like straight to the point. Very plain and simple. Okay. Again, another double top. You get a bearish engulfing. Boom. Market dump. We wait for market to come back to a zone. Once market come back to the zone, we wait for it to give us exactly what it did last time, which was a a bearish engulfing to sell. Once market give us that bearish engulfing that we are looking for, again, any one of the five, we would take our sell to the downside. But before then, we know this wick high is where we're going to place a stop loss because we don't have a previous structure to the left. So we're going to use the wick high, right, for the stop loss. So like so, you enter and then you target in the next structure point and then so on and so forth. Okay. We want to keep this very plain and simple. Okay. Now, here we have again a break and retest to the upside. Now, with this setup right here, I know we don't have the infrastructure in a smaller stop loss per se. A lot of time, market will give us a small infrastructure within here. What I mean by that is when market was buying, a lot of time it does this. Okay. What I'm saying is once you enter here for the break and retest, you look at this infrastructure, the next infrastructure that they give you in between it to use your stop loss. Okay. There's always going to be a previous structure of some sort to place your stop loss. All right. So you get that for break and retest to the upside. You also get a break and retest for the downside. The same concept goes here, right? You got a major break and retest. You take your sell to go to the downside. Normally, this is where your stop loss goes. A lot of time you do get something like this. Okay. So you would use this one as your stop loss. Okay. So the concept is to always use the previous low point or the previous high. So for a bullish trend, a buying market, a buying market that's giving you higher highs. Okay. And high lows. Okay. When you buy the market, you target the previous high low for your stop loss. And for a bearish trend, a selling market where you look to take your break and retest. Okay. When market comes at your zone point, once you enter your trade for your sell, you target the previous high point. In the case of this, it'll be the previous lower high. Okay. Straight to the point, no emotions, no hope, just structure and take it for what it is. Yeah. So just like I was saying, with this itself, this entire framework is breaking down step by step in my book, The Ultimate Stop Loss. If you want to stop losing good trades to bad stop loss placement, I'll leave a link below. And like I said before, everything that you need is going to be in here if you're looking for a different mindset, a different way of thinking when it comes to trading without the stress or the anxiety of it. Everything you will need to know about the ultimate stop loss is in here. feel free, and I would really appreciate it if you would like, comment, definitely subscribe. I'll truly appreciate the love. Share it with your friends. I'm sure there's a lot of them out there that's going through the same thing. They're just not telling you about it. And I'll see you guys in the next video, where I go more in depth with some psychology behind trading itself. Royalty FX Academy, as always, trade less, live more. Peace out.